Hi everyone, welcome back to my channel. Today I want to do a video on how I use volume gaps every single day for trading. I want to give examples on intraday trading and higher time frames, as well as showing how we can use fixed range volume profile to determine where price will react based on previous trends and consolidation zones. Before we get started, if you'd like to get a 10% discount on TradeView, don't forget to use my referral link in the description. You'll also find referral links for TradingView and Top Step Funded Trader programs that will give us both discounts. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. With all that being said, let's get right into it. So you can see here on my chart, I have two volume profiles, and the way these are configured, let me go ahead and turn these off for now. You can go up to indicators, you can go to, and this is for TradingView, every broker is different, and I did do a whole volume profile video previously, and at the end of that video, I show how to set this up in Thinkorswim and TradeView as well. But in this case, I want to show if we go to volume profile and technicals, I add in the periodic volume profile and the visible range volume profile. So the first one I want to talk about is periodic volume profile. And for intraday trading, I have it set to 1 day. Value area volume is 70, row size is 300. And then I turn on my value area high, value area low, and POC. Now, again, I covered this stuff in a previous video about volume profile. So if you don't know what that is, please do reference that video. You'll have some great insight in there. Now, the other one I use is, and that will show me the volume profile for the whole day. And on higher time frames, I do indeed set that to weekly or monthly, which we'll get into shortly. And then for visible range, this will show us the volume profile for any price action that's in range, essentially. Now we're looking at QQQ on the 3-minute currently, and you can see how visible range automatically adjusts based on the candles, the price action that I have in here. And I have this configured in a similar way, except because of its dynamic nature, I turn off all of the value areas and POCs, and then row size 300, value area volume is 70. Technically, this can be set to 100 to give some better visibility, which I'm actually going to set now. And so the way I use this, and I want to show what these volume gaps are and why I love them essentially. And so basically, if we look here, we have these high volume nodes, low volume nodes, which are the gaps I'm referring to, high volume nodes, low volume nodes, and the high volume nodes. And let's actually go to this day because I think this can show us some might make it easier, a little easier to see for the purposes of this video. Now, we can see that the high volume nodes typically form where we have areas of consolidation, and then the low volume nodes are where there's a lack of participants. And I often see volume profile taught wrong, where it said that if you're going through a high volume area, you're going to see price struggle to get through it, and then when it goes to move through a volume gap, it's just going to get through it no problem, slice through it like butter. And while it's true when we are moving through a volume gap, it will move through it quickly. However, that it does not mean that it can get through it easily. It means that momentum has to be built up first before we can see that move. Now, that typically does happen with trend. As you can see, we've been in an uptrend. So essentially what happens is as we pull down to a volume gap, we'll typically hold. So we can see if we use our visible range here, we can see that we have a low volume area right here, which we held in, right? And then at that point, we were able to gain enough participants, enough liquidity to start pushing higher, which we ripped through this volume gap and continuing the current trend essentially. And then what happens is when we get to the next volume gap, which you can see on visible range or periodic volume profile, price stops because there's a lack of participants. So in these high volume nodes, we have plenty of participants. And then in these low volume nodes, these gaps, we have a lack of participants. So we'll see the price actually stop. And then what happens is we have to build up enough momentum. We can get through the volume gap, and then we come down. And well, first of all, look at where we stop. We stop at the next volume gap, which we can mark here, right? So this is going to be where we reject off of. And let me just slide that up. And the key is you want to look for these ledges, basically, where we go from these high volume nodes to quickly drop down to these low volume nodes. It forms these ledges, and these essentially will act as support and resistances for us. They'll help identify that. And we always do want to compare to price action. It's very important to always line it up with candles and price action. But these volume gaps and these ledges will essentially act as order block zones or areas of support and resistance, supply and demand. You often hear it referred to. And what it really is just a lack of liquidity. So we have to build up momentum. It's sort of like a bring your own liquidity, bring your own volume situation, where in order to get through a gap, you have to build up momentum to ensure to get price to move through it. And then sure enough, once it does move through it, that's likely going to be your next area. That's likely going to be your next launch pad. So you'll come back, retest that low volume gap, and then move higher. And that's essentially how I play these, is exactly what I'm talking about, is areas of supply and demand where I can expect price to stop moving, where I can expect participants to stop participating, and price will essentially stop. And I always try to assume that the trend will continue, and therefore when it comes to these volume gaps and I get candle wicks and confirmations of holds, I'll take my limit order entries, and my initial price target can be the next gap. And I won't take it all off, but I'll take some of it off. And then as long as we see us get through that gap and it hold as the next area of support and keep going, then I'll try to stay in that trade as long as possible. And that's what's so powerful about these. Now, we can see that this is how it looks on a completed chart, which it may not be so easy. So let me just replay a day here so we can see how this forms as the day goes on. So I'll start this right here. And at first, this periodic volume profile is going to be very light. Now, one thing we can do to get to sort of cheat to get an idea of where price might react is we can set it to a higher time frame, and that might give us some additional insight. So if we set this to 1 week here, we can see, okay, this will show us like the volume gaps, the areas where price is likely to stop reacting, and or where we're likely to see holds, which we can see right here was a volume gap for the week, which we had resistance, broke through it, and then it became strong support, which is exactly what we were talking about. Problem is, this is a trending market, right? So we don't necessarily have a lot of data up here on the periodic volume profile. Now, one easy solution for that is to go to the next higher time frame, and essentially you can set the periodic volume profile to monthly, which is one option. Or what the whole reason I love visible range is because now all of this price action in here, I can see all my high volume nodes and all my volume gaps right here on the right side for all the price action within view. And I can try to get an idea of where price will stop. And if we even look where we ended, we can see for this period, we can see sure enough, it corresponded with this volume gap. And if we zoom in on this lower time frame, look at that. When we moved up to that big volume gap, we rejected and we started moving lower as of now. So that's what's amazing about this. But again, it doesn't necessarily indicate that when we're using this intraday, right? So we can get an idea of where supply and demand zones will be based off the volume profile, volume gaps. But I just want to show how you can use this intraday and how it will look, and how it can still help you with your trading, even not just looking at price and volume historically, but as the day progresses. So if we let this play out a little bit, and this is what's crucial about using the periodic volume profile, going into the day, you should always have all your levels and everything already pre-plotted from prior day price action, prior day volume gaps. All that stuff should be pre-plotted, and I've already done videos about that. But intraday, this still can be useful to us, because even if we don't have levels, or even if we don't have lower time frame levels, so we have the higher time frame stuff and we want to get an idea of where price will react, but periodic volume profile for the day can help us do so. So let's take a look at how this plays out briefly here, and we'll see, okay, as we drop down, this is what I want to show. So we've had about an hour and a half of price action playing out, and we can already see we've started to form some initial volume gaps. So we know that we're in an uptrend, we came down, we held, so there's this is our bottom point essentially, which I doubt we're gonna get to. But also you can sort of see we have this high volume nodes popping out here, and then we have like these low volume gaps right around here that we want to take into consideration. We also have a volume gap that's formed right around here that we want to take into consideration, and notice how this did act as resistance. And then of course we have this double top, which is currently the value area high. So let's see how these gaps play out as price continues to go. So you can see right here we actually get a hold, and price starts to move higher off of this lower volume gap, and we can see these high volume nodes filling out more and more as it goes on. So now the question is, so since we held this little volume gap right here, that's what I want to show you. So again, this next volume gap, we get this rejection. No surprises there. We had a volume gap. So we have all this movement within these high volume nodes. Price is having no problem moving around in there. But as soon as we get to these gaps, price all of a sudden struggles to move higher. So what needs to happen in order for us to move through this volume gap is we need to build up momentum. And now look at this. We're starting to form a volume gap right around here. So the question is, are we going to come back and retest this zone? Are we going to find momentum here? Is it going to be the value area low? And these are how we use candles and volume, which I'm not going to get into in this video. But essentially, sure enough, we retest this zone, and then we potentially, let's see, we might get another retest, but we're building up momentum, we're making higher lows, and then boom, we get through the volume gap finally. And then now, based on this lack of volume, the lack of participants that we had up here, we should actually start to see what price potentially struggle. Look, and now it's using this previous volume gap as support. And sure enough, we come up here, we start to struggle. It looks like we're going to get through it. Yep, we do end up moving through it. We struggle within it for a little bit before moving higher. And it does actually no longer represent a full volume gap. It became more of a higher volume node as we retested these highs. But we can keep playing this and then even use it as support. And also we have our value areas, which act as great dynamic levels. But I just wanted to show you, and you could use visible range for this as well. You just want to make sure that the day, you're only viewing the candles for the day. If you start viewing prior day's candles, it can skew the visible range, but also that can be helpful. It really depends. But so that's what's amazing about those volume gaps. And then I think we can pretty much end this here. I just want to show you one quick trick with fixed range volume profile, and I just also want to demonstrate how this works for anything. It does not just need to be equities. This can be anything that has volume. So if we look at Bitcoin, for instance, and this is Bitcoin on the daily chart, and we can see visible range, all this price action, right, where we have our volume gaps where we're likely to see price struggle with, and we've already talked about this, so I'm not going to go too much more into visible range, but you can see that this area right here has always acted as support, and then we eventually got through it. Now it's starting to act as resistance. But before all of that even formed, we can actually, so when we had this strong uptrend, it's oftentimes it's a good idea to measure where liquidity was injected during these strong impulsive moves, during these strong uptrends. And one way you can do that is you can go to fixed range volume profile. Now it might be called something different for other brokers, but most brokers do have this feature, and you can just measure volume for a specific area and get an idea of where your volume gaps are on previous trends. But what's amazing about this is we can see these high volume nodes. This is telling us where participants are coming in to push things higher and where participants are falling off and where price will typically stop. And look how, even though this happened so long ago, these volume gaps were still a consideration for quite some time. And then eventually when things did start to shift, because this was all the way back in 2020, right? So things did shift, but coming up here, this was a consideration. But also look at the high volume nodes. Let me zoom in here. Look at the high volume nodes that kicked off this trend. So, I mean, this is billions and billions of dollars that started kicking off this trend that moved Bitcoin higher. And so we can see the POC where all the high volume came. If we just mark this, let's see how price reacted at a later date. So let's scroll over here. Let's see how price reacted when it finally came back to retest this POC. And look at that. You could see we had this massive Bitcoin sell-off starting all the way back in November 2021. And then we're struggling all the way down, and we have our volume gaps. All these things are playing a part. But what started this whole trend up was this massive amount of liquidity that got injected, reflected by this POC. And sure enough, we see after this massive fall, this actually holds after all this time. And that's what's incredible about it, is you can use fixed range volume profile to measure this stuff, to measure where the most amount of volume came in. You can do it on any instrument. So anyway, I hope this video was helpful to you. If you hear me talk about volume gaps in other videos, I mean, I use them all the time. And I also wanted to demonstrate fixed range volume profile. And it's not just for trends. I mean, we can use fixed range volume profile to measure areas of consolidation. And you can even use this intraday. So, you know, if we want to see where the most liquidity was being injected at, where the most volume was coming into play, we can do so using this stuff. So, and oftentimes this does line up with price, right? So you have multiple confluences. You want to always line it up with price action, but we can see chances are that typically that if we keep moving back up, it's going to take a lot of momentum to get through this large of a volume gap, right? This is an area that participants are leery of investing their money, but once we do, there's a very good chance that in the future for Bitcoin, once we get up to this zone here, that it's going to be defended pretty fiercely. So, and the reason I say that is because of the amount of volume in here. This is right where the POC is, and they might even start defending it early. And again, this is where those volume ledges come into play. So, like, if we might even see them start defending it here. So, you know, if I were looking for shorts on Bitcoin as we move up, I would certainly mark this area to say, okay, this is where, and you can see visible range also shows it for us, which is really nice. It kind of negates the need for fixed range volume profile, but at the same time, it's just such a useful tool. You can do this on impulsive moves, like when we've had big impulsive moves on FOMC, for instance, where we get these large imbalances. I'm trying to see if I can find one here. So we had this rapid sell-off, which typically relates to like some sort of macroeconomic news. We can take the fixed range volume profile and we can measure, not only measure areas of consolidation to see where liquidity was injected at, but we can also measure the trend itself to get an idea of areas where we might see price struggle. So we had this come down, we had it consolidate, drop more. When we come back up, sure enough, it rejects right off this POC, drops again, comes back up. Eventually we do get through it, right? These areas won't be defended forever. Eventually they do burn up. Any of the sellers or the buyers, whoever's defending the area, do eventually get exhausted with enough power behind a move. But it's just great for, you can do this, line this up on prior moves and get some amazing trades out of it. So hopefully this was helpful, and this is a fantastic tool. Volume profile is probably my favorite technical indicator, and if you found this helpful or you have any questions, please let me know. I appreciate you watching.